Hi traders, and welcome to my video on the hammer candlestick pattern. In this video we're going to be looking at the bullish hammer candlestick pattern. Okay, so as the name suggests, we're looking for a candle that looks like a hammer. Okay, so I'm going to do this with you now. Go through the chart and look for a bullish hammer candlestick. Right. Okay, that could be one. Let's see if we can find a better one. There we go. Okay, here. This looks like a hammer. And why does it look like a hammer? Well, there's the top of the hammer, the metal part if you like, and there's the handle, which is the wick. So the body is the top of the hammer, candle body, and the wick is the handle. And it looks like a hammer, as you can see there. It's okay for there to be a wick on the top as well, as long as it's a short wick, just like the handle sometimes when a hammer extends out of the body. Most important thing is you want a long wick, definitely longer than the body. And the point of this is it is a bullish signal, the bullish hammer candlestick pattern. Granted, this is a bearish close here, however, it's still a bullish signal. This is because the bears were trying to push the market down. The bulls fought back quite significantly and managed to push the bears all the way back up to form this hammer candlestick pattern. And as we can see here, the bears were having a nice run down, and now the bulls are fighting back. We have this hammer pattern. In fact, we have one back here, which would have also signified a reversal, but you don't necessarily jump in straight away. So we first identify the candle there, okay, and we're gonna look for the trend to start forming upwards. And like I said, don't jump in straight away. What we can do, well, that's good that we can see there was a level of support there. That would have been reason alone to perhaps ignore this one. And then we can see that the price came down, touched this support level, went over it for a while, but then the bulls pushed it back up. So we can say that that's a bounce off of that support level. And some of you, the brave ones out there, may have just taken the entry based on that and entered here and been really happy with your decision, over 330 odd pips. Others may have just waited patiently just to see how this plays out, let the trend form. As you can see, it does nicely, and there's ample opportunity to enter on the pullback to this trend line here. You can even look for hammer candlestick patterns along this way, or this trend line, along with there's one there, see, or other candlestick patterns. So a spinning top there. You can of course use resistance, breakout here to get into the trend. There's a million different ways you can time your entry. The key thing about the bullish hammer candlestick pattern is to use it to help you identify reversal in the market. You can use it for entry as well. Perhaps you're using another indicator, you're looking at a level of support or resistance, and you want it a signal, you're waiting for a signal to enter. You could see the hammer there, and that can be what triggers the entry for you. Okay, I mean, up here, there's a hammer there as well. Just show you there's a hammer. I mean, we are starting to come away from this support level. The support level's held up well. You know, price is looking like it's going to break out of this range. In fact, that price is just broken above this previous resistance level, which again shows good strength. strength for this upwards momentum. So that could have been a good entry there. Again, still lots left in the move. Oh, there's another one there. You see, if you want to get in late to the party, you still can. Hammer, candlestick there. Bears tried to push the market down. Bulls pushed it back up, showing strength, and up it went. Over 100 pips. So it's just good to be aware of this pattern on your chart. Ideally, it would be a bullish candle, but as you can see from this example, it's not necessary. You can, of course, use indicators for your entry if you prefer. Let's just put the stochastic indicator on the chart. So on a uptrend with the stochastic indicator, you're going to look for price to be in this oversold zone here, anything below 20 or around the oversold zone, and for the main line to be above the signal line. So we can pinpoint an entry there, possible entry. We have our trend, our hammer, bullish hammer candlestick pattern, and the stochastic. In fact, that's a spinning top as well, spinning top candlestick pattern for further confirmation. We're seeing that support has started to build up here. If you go down to the lower chart time frames, that probably look like a lot more significant support. And yeah, another good entry there based on the stochastics this time. And confirmation, have a pullback there and a crossover. Okay, you may have waited for price to come back around this line before entering, considering we've just bounced off this resistance level. That being said, if you had your stop loss below this support line, still would have been a good trade. And again, another crossover there. And that's a good one because it's right by the support line. Spinning top candlestick pattern, an inverted hammer candlestick pattern, and then the hammer we had up here. There's plenty of signs there that there's going to be bullish momentum continuing. Not to mention nice bit of divergence on the stochastic oscillator as well. Okay, so don't necessarily jump straight into trades when there's a bullish hammer candlestick pattern. Just use different indicators, price action, support, resistance to time your entry, fine tune it, and as always, sensible money management. I like to cut my losing trades short. If I've made a mistake and taken a wrong entry, I'm happy to admit it, get out, and just make sure when opportunities like this come along, I can catch a big market move. You would have maybe looked to have exited around here somewhere just because of the indecision you can see in the market up there. Okay, you know, strong resistance, price moving away, stochastics oversold. Yeah. Okay, so hopefully that gives you an indication of the hammer candlestick pattern, what it is, what it inclines, and you can use it on any chart time frame, any trading instrument. I just find that it tends to be more reliable on the 1 hour charts and above, simply because there's more price data included. I definitely wouldn't pay attention to them on, well, I'd be aware of them, but I wouldn't necessarily use them on the 5-minute charts just because there's not enough data within them. It can be a lot of market noise. Anyway, hopefully this has helped. Thank you very much for watching, and please like and subscribe for more.